Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world without all the jargon. Today we're diving into a filing from Comstock Inc, a company that is busy trying to recycle solar panels and make renewable fuels. It sounds pretty high-tech and important, but is it translating to solid business? Let's find out. Before we jump in, make sure you hit that subscribe button if you want more of these unfiltered looks at corporate filings. Also, if you want to join a community that is deconstructing business news and filings with us, check out our Discord server linked in the description below. So Comstock has filed this thing called a registration statement on Form S-3. Think of this as a company telling the government, hey, we might want to sell more of our stock or other things like bonds and warrants in the future. And here is kind of a general plan. This particular filing is for up to $200 million worth of securities, and it also covers an at the market offering to sell up to $100 million of their common stock. This means they are planning to sell their stock on stock exchanges whenever the price feels right. They are based in Nevada, and their main contact point is their executive chairman and CEO Corrado de Gasperis. It seems like they have a two-pronged approach to their business. First, they are all about recycling things like old solar panels to recover valuable metals. Second part of their plan involves renewable fuels through a company called Dilution, which aims to produce things like cellulosic ethanol and sustainable aviation fuels. This sounds like they are trying to be part of the green economy, which is definitely a hot area right now. Their whole mission seems to be about speeding up the adoption of new technologies that can help with energy and resources. They own some land in Nevada, some mining claims too, and investments in other green tech companies. It is quite a diverse portfolio for a company of this size. Let's look at their actual operations. They have a metals segment whose goal is to become the global standard for solar panel recycling. They've been running a demonstration facility and have seen some revenue growth from it. In fact, in the first 9 months of 2025, their billable revenues increased almost 6 times. That sounds impressive, but we need to see the actual profit numbers. They are also planning a much larger industry scale facility. The mining segment generated income from leases and fees. They also recently sold off some northern mining claims for about $2.95 million. That sale contributed to their income. Then there is the fuel segment through Dilution Corporation. This seems to be more in the development stage and doesn't generate revenue yet. They have pilot facilities and are working with partners like Marathon Petroleum. Finally, they have a strategic investment segment where they hold stakes in other green tech companies. For the rest of 2025, their corporate objectives include selling off any legacy real estate that isn't core to their business and figuring out the best way to separate or maximize the value from their Dilution venture. For the metals segment, they are focused on getting permits for their big facility, ordering equipment, and securing more customer contracts. For mining, it is about monetizing those northern claims and working on feasibility studies for other projects. For Dilution, it is about continuing to raise funds for their series of financing, planning their first demonstration facility, and expanding pilot production. Now let's talk about the part that might directly affect investors right now. They have this at the market offering related to their common stock. Think of it as them being able to sell shares of their stock directly on the stock market whenever they want, up to a maximum of $100 million. This is happening through a company called Titan Partners Group, LLC. Titan Partners gets a 3% commission on any shares they sell. The last reported price for their stock on the NYSE American under the symbol LODE was $3.28. This is where things get really important for any investor. Comstock itself warns that this offering has risks. The actual number of shares they will sell and the money they will raise is uncertain because it depends on market conditions. They also highlight that if our common stock is delisted from the NYSE American, it could really hurt its liquidity and value. And get this, they say they might not declare dividends on their common stock. This means you are not likely to get any regular income from owning their stock. This is another big one. They can issue more stock and more preferred stock, which could mean your ownership stake gets smaller and less valuable. They also mentioned something called net tangible book value. As of the 30th of September 2025, it was about $1.88 per S-share. If you buy their stock for more than that, you could experience immediate dilution. This means right away the value of your investment could be less than what you paid for it on paper anyway. And of course, the price of their stock can go up and down a lot. They list all sorts of reasons why this might happen, from market sentiment to regulatory changes to even coordinated trading activities that could cause a short squeeze. This is pretty standard language for a volatile stock. They plan to use the money from selling stock for general corporate purposes, capital expenditures for their metals facilities acquisitions, and developing their technical and operational capabilities. However, they also state that their management will have broad discretion in how they spend this money, and it might not always improve operating results or enhance the value of their common stock. That is a pretty direct warning that the money might not be used in a way that benefits shareholders directly or immediately. So getting back to the at-the-market offering, they will work with Titan Partners to sell shares as needed. Titan Partners get paid 3% commission and we need to reimburse them for some expenses. They expect total offering expenses to be around $150,000 initially excluding commissions. They will report how many shares are sold and the proceeds regularly. Titan Partners will be considered an underwriter in this process. Alright, let's put on our investor hat and analyze what all this means. Comstock is clearly trying to play in the green economy with its solar panel recycling and renewable fuels ventures. The metals segment showing revenue growth is a positive sign, and their ambition to build industry scale facilities shows they are serious about expansion. However, a lot of their business seems to be in development phases, especially Bioleum, which is not yet generating revenue. This means a lot of their future success hinges on their ability to secure significant funding and execute complex projects. The at-the-market offering is a common strategy for companies that need capital and want flexibility. It allows them to raise money as needed, but it also means they can issue shares at potentially unfavorable prices, which can dilute existing shareholders. The risk factors they list are pretty standard, but the emphasis on potential dilution and the price of stock fluctuating significantly is something to pay close attention to. They also admit that the proceeds from the offering might not improve their operations or stock value, which suggests a degree of uncertainty about their future performance. Looking at their financials, which are incorporated by reference from their previous filings, we see a company that is still very much in a growth and development phase. They are investing heavily in building out their infrastructure and technologies. This means they are likely burning through cash and relying on external financing. The sale of mining claims is a good move to bring in some immediate cash, but it is likely a one-time event. The key will be whether their core businesses, particularly the metals recycling, can become profitable and scale effectively. In conclusion, Comstock is aiming for a big impact in important sectors like green energy and resource management. They have a clear strategy and are actively pursuing it. However, they are also facing significant execution and financial risks. Investors should be aware that this is a speculative play. The company's success will depend on its ability to navigate complex operational challenges, secure continuous funding, and ultimately generate sustainable profits from its recycling and fuel ventures. The current offering provides a way for them to get more capital, but it comes with potential dilution for shareholders. Alright, that is our deep dive into Comstock Incorporated's latest filing. What do you think about their plans and their approach to raising capital? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate investigations. And again, if you want to join a community tackling these topics head on, check out the Discord link in the description. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.